All right, guys, welcome to another episode of Dive into Real Estate Investing for Newbies podcast. Look, I have a very special guest, Mitch Stevens. For those of you who don't know Mitch, Mitch has been in this business for a while now. He has coaching students. He does business all over the U.S. Just a little brief biography or resume of Mitch. He's the author of the book series My Life in 1,000 Houses. Actually, I think it's 2,000 houses now, huh, Mitch? You've brought.
Yeah, yeah, but who's counting?
Yeah, who's counting? Yeah. Also, it is an autobiography, Failing Forward to Financial Freedom, which is a autobiographical story about how Mitch, as a younger entrepreneur, morphed into a professional real estate investor with over 1,000 houses transaction to his credit. So, which is 2,000, but like he said, who's counting? It's continually growing. So, Mitch, thank you for being on the show, and just tell us a little bit about yourself, Mitch.
Well, I started my investment career about over 2 decades ago. I have purchased a house about every 4 to 5 days in or about my hometown of San Antonio, Texas, for over 2 decades. So that and $7, will get you a cup of coffee at one of those expensive coffee houses. But and I'm under no illusions. There are people that are bigger than me and can use my financial statement to wipe their backside. But there's also a lot of people that would like to be where I'm at. So I always go through life with a hand down, trying to pull people up that want to get to my level. And then I have a hand up, trying to attach to some people that are doing more than me. So I do want to make just a couple of corrections. One is, I don't really do business all over the United States. People think that I do because of the numbers, but that's just in my hometown or in counties contiguous to my hometown. And so I like to keep, my properties close to me because I have about $26 million in private lenders' money out on the streets right now. So in a few days on the 1st, I'll have to make principal and interest payments on $26 million.
Wow.
That I raised from private lenders. And I like to keep that close to home and very close to me in case the fit hits the shan. I'm there. I know my market. I know my culture. I have all my crews. I know my city. I know my inspectors. I know everything. And I know how to navigate if times get tough, because I have to protect those private lenders at all costs, because they're the reason why I am anywhere in the financial world today, is because of those people that lend me money. So I take it very serious, and I make sure that I'm not spread too thin or spread too far out. I'm right here, and if the problem needs to be fixed in this town because of whatever economic reason or whatever's going on, if I can't do it, nobody can do it. So that's why I keep it kind of close and all right here. I specialize in single-family houses. I buy about 100 houses a year for the last 2+ decades. 100 houses a year, give or take a couple. In COVID, that problem hit. I only did 83, which I thought was still a coup for that kind of unknown environment. Right. So I seller finance about 70% of my properties on 30-year notes at 10% interest, more or less. And that's what I do. I buy houses with OPM, other people's money, 100% other people's money. So I have no money of my own in these properties. And then I seller finance them for 2x is the goal. And I carry the notes for 30 years. So I'm not a landlord. My cash flow is that of a bank. I am a mortgage collector. I collect mortgages. I am the bank, not a landlord. So what I like about that model is, when the payment comes to me and it clears and it goes into my bank account, there's no reason for that money to leave, because unlike a landlord, I have no liabilities. If the air conditioner breaks, it's not my house. I sold it to my buyer occupant who owns the house and the air conditioner. I'm just responsible to collect the payment. And that's what I like about that strategy.
Right. So there's a saying that own nothing but control everything. Is that pretty much what you do? I'm sure you own things, but
Well, I mean,
a
I
lot
do
of
own them, but that's a little bit different. I mean, there's ways to control things and not own them. My companies do own them, but I have $26 million in non-recourse, collateral only private lenders money. So I borrow the money from my private lenders in the first lien position, say like I borrow 50,000 in the first lien position and I buy a house with that. And then I seller finance it for 100,000 with 10% down. And, I no longer own the house, but I own the mortgage on the house,
right,
and I'm due 30 years worth of payments. So, yeah, it's close to that though, because my loans are collateral only, non-recourse. I have two rights every day. I can pay as agreed, or I can walk my position in that property to whoever my lender is. Now, that being said, I've never given a lender back a house. I've never been foreclosed on. I've never filed bankruptcy or Chapter 7 or Chapter 13 because there's too much margin in this business and I'm too good at what I do to let any of that happen. Because the minute I start giving doctors and lawyers and 70 and 80-year-old people houses instead of payments, they're going to quit loaning money to me. So, it'll be a cold day in hell before I ever let my lenders have any problems.
right. So let's go back. You're saying you're buying every 4 to 5 days, you're buying a house, basically.
Yeah, it's about 100 houses a year.
About
And
100 houses.
I've been buying about 100 houses a year, give or take. My best year I did 150. My worst year I did like 60, but it averages out to about 100 houses a year for over 20 years.
Right. So, and I also heard, I think you said you took like 2 years off at one time, right?
Yeah, I did, but the business didn't stop.
But the business didn't stop. Absolutely. Um, so tell me, Mitch, when you first got started, how did you come across? Because I think basically you do owner financing. Can you just kind of explain to the audience what owner financing is? How did you get into it? Maybe a typical first deal. Did you stumble on it, or it was something that you were taught, or how did you come about
No,
that?
I stumble onto everything through circumstances. I get forced into corners, or I get put in a box, or something happens, and then I have to figure out how to mitigate that circumstance,
Right.
and then I come up with a new, better, like, why in the hell didn't I do it like this way from the start? But I'm usually forced into something. And so I started out like everybody else. I was buying houses and flipping them for a profit. So no one would loan me any money, and I was very young. And in my mind, I didn't think I could get private money. I now know that that's not right. That that you can borrow money no matter who you are. It's all about the deal, not about you. But I went out and got credit cards, and I was buying houses on my credit cards, because back 20 years ago, I could buy houses in San Antonio for $10,000 and $15,000 and $18,000 on the lesser parts of town. So I'd borrow cash advances off my credit cards at 0% interest, and then I would fix them up with another credit card, and then I would sell them and make a profit. And I did my first 100 houses on 0% credit cards.